Hey, it's Michael Saul, but everybody calls me Tiny. This video is, does lower highs mean it's time to dive? Plus, watch for double support on this stock. This is stock market analysis for the week of October 8th, 2018. If you would like to receive intra-week updates, go to www.attackthemarkets.com, put in your first name, your best email address, follow the directions from there, and you'll be all signed up. Facebook group is at facebook.com/groups/attack the markets. If you like what you're hearing, give me a thumbs up. That's the YouTube way of giving me a like. Leave a comment, and if you never want to miss a video when one is uploaded, hit the subscribe button and smash that bell so you'll always be notified when I upload a new video. Okay, so let's take a look at what happened in the market. So first things first, this is what I mean by a lower high, okay? And what happened here, punched out of this coil on the S&P. We did it actually, we did it on Monday. And we tried to continue on Wednesday to go up to the highs, but then boom, the market pulled in. A lot of it is being blamed on bonds and worry about inflation and rates are rising. And I will talk about bonds in a minute, but I've been saying for weeks and weeks and weeks about how bonds look lower, and everybody was trying to catch a bottom there, and I just didn't see it. But that's, once again, I want to make sure I'm clear. That's not me bragging. I didn't say, hey, get short and just stay short, right? I didn't say that, but I was real cautious on the long side. Okay, now, it would be a hero call if I managed to say, yeah, get short too. But anyway, all right, so we have pulled back. We did hold the 50-day moving average. I am using the SPY. This is the S&P 500. We did hold this horizontal support. So could the pullback be over here? Possibly, but I think we have a little bit more downside to be seen, and here's why. I think we're going to go into something of this length that I had highlighted a few weeks ago that never happened. I think now that this is a distinct possibility that we could continue down. Okay, this pullback would equate to about what this pullback was. Now, does it have to stop there? No, but the markets tend to move in a very symmetrical manner. If you notice, this pullback is just about equal to that pullback, is just about equal to that pullback. This one actually came up a little shy, a little front running, but this one, yeah, this one could go a little bit deeper. Now, we obviously have to trade below Friday's lows. Duh. I mean, that's the obvious support point. But if we do, I would not be surprised to see us go down to at least this level here, which is 280, 270s. No, I don't think we started a bear market. No, I don't think we get a huge correction. I just think that the market's feeling the pressure of being pushed up most of the year, except, of course, for this little doodaddy and this one too, right? But the market has, seen good gains, right? Not unbelievable blowout gains. September, usually the worst month for the midterms. It was not that bad, actually. I think it was positive. It doesn't matter. It was negligible, even if it was down. Okay, so that just doesn't matter to me. We didn't see a big sell-off, so maybe overconfidence came in. And then with rates rising and bonds breaking, the people were like, you know what? Yeah, things are a little too hot here. But again, I'm not looking for a short here, and to answer the question on the title of this video, I don't think we're in for a dive bomb here. Don't think we're going to just dive down. But doesn't mean that you just start jumping in and buying everything in sight. Okay, that's not the prudent way to do it. You wait to see how support holds, if the support holds, because it could hold right here, and we could, just because I think we're going to go lower, that doesn't mean that we can't hold here. But if it does hold, okay, then you look for the stocks that held up the best during the decline, and those are the stocks that you want to pay attention to. You still want to look for patterns. You still want to use your triggers. It's not just Pollyannish, oh, we're going to finish high. Look, I said it last week. I think we're going to SPY 300. I think we're going to finish the year we're going to at least hit 300 by the end of the year. I don't know if it's right into the end of the year or lately the market's been stopping a couple weeks ahead of the end of the year. Whatever it is, it's irrelevant. I still think we're going higher here. But just because I think that doesn't mean that, oh, any weakness is a buy, any weakness is a buy. No, you still need a pattern. All right? Okay, so that's the S&P. The Dow looks the same. The Qs, yeah, they got hit, and they took out some minor horizontal support, and they did close below it, closed below the 50-day moving average. But the NASDAQ's been hot. NASDAQ's been leading, so it has more to correct. Now, the Russell, Russell already back to the 200-day moving average. The Russell crosses that 200. Technically, that's in bear market territory. Again, I'm not calling it a bear market, but just as a reminder, or if you're new and you haven't been watching my videos, when we're above the 200-day, I am biased on the long side, and when we are below the 200-day, I'm starting to look at the short side. Now, there are other factors, of course, if it's the Russell by itself or just the Russell and the mid-caps, right, which also looks the same, right, and the rest of the indexes aren't there, then we have a split market, and then it's a little different. We're not going to have a full-on bear market. But rest assured, below the 200-day, you're going to hear a lot of talk. Okay, you're going to hear a lot of talk, and, of course, we have to see if we get the 20% down or more to officially call it a bear market. I don't foresee that happening right now. Doesn't mean it won't happen. Okay, I'm looking for support to come in sooner rather than later. Maybe we do break the 200-day on the Russell and the mid caps if the S&P does get to that measured move that I'm looking at. Possible measured move that I'm looking at. Maybe everybody freaks out. Oh my goodness, the Russell mid caps are below the 200 days, and then maybe it turns from there. Again, I'm not going to be guessing. I'm going to be watching for setups. All right, I'm not going to go through the sectors, but I'm going to go through some of the glamour stocks here. Here's Amazon. Has support coming up here. Here's Apple. So Apple pushed up to new highs. Now it's back into this flag pattern. You still got the 50-day below. Here's the Zuck book, which looks lower. I'm still calling us to at least test these March lows. You could see if we put up the 78% retracement here. Let's see, we do this, and then we do this, and then we change, because I don't really care about 23.6, so now I change 78, right? And now I can even make it as default, so I don't have to worry about it anymore. And then you see we're through the 78, so to me, that suggests we're going to 100% retracement. All right, how about Netflix? One of the stronger stocks, but right now is in more of a range. Watch that 200-day if it decides to push lower. Here's Alphabet. Watch the 200-day moving average there as well. Here's Tesla. I mean, Musk told to step down as CEO, $20 million fine, which is basically a parking ticket. Watch the 2018 lows to come in as a test. Goldman Sachs looks lower, looks like it wants to test the lows. Bank of America had a little bounce midweek, but turned at the 200-day moving average. Again, a little sloppy, so I'm not in a rush to jump on this one. How about like KLA Tanker? Looks like it's headed low. And NVIDIA acting better, so if you're looking at semiconductors, but still, it's a pretty sharp decline the last 2 days of last week. Watch the 50-day moving average, see if it comes in. Here's Intel, smacked the 200-day and turned. So let's see if that's all she wrote on this little correction, and it goes back down, tries the 44, and then the 42 handles. What else do we have? Microsoft. Yeah, I want to look at Microsoft. So Microsoft has been one of the strongest stocks. I mean, look at this. Just totally cranking. And it's pulled back now, the hammer at the 50-day moving average. This is one of those stocks I said to watch because it's acting relatively strong. So if the market does turn, Microsoft may be one you want to watch. Oops, I thought I screwed up the recorder. Okay, so here's Caterpillar and John Deere. Yeah, both looking okay. So they're getting a little bit of money flows into them as tech is getting a little money flow out. Again, I always like to watch these stocks, but I'm not really, I don't consider them leaders, but they are bells, especially for the manufacturing indexes. Okay, so here's the bonds, and I was talking about bonds going lower. This is the small Fibonacci retracement, probably has to go up here, and you could see we basically hit the 161.8% external retracement. It happened quick too. Rates rising, unemployment at 49-year lows, lowest since 1969. I just love how Everybody has to distract now from how great Trump is doing with the economy. And yeah, I am pro-Trump, like it or not, by talking about the Kavanaugh, the Kavanaugh proceedings, for lack of a better word, and everything else, right? It's ridiculous. You can't give credit where credit's due, but everybody will scream, the Obama fans will scream about, wow, he was the one who tripled the market or whatever. Okay, yeah, great, but he's not there anymore, right? And Trump has been doing a great job, and okay, I mean, people love to point out the flaws, and yeah, I know the conservatives / Republicans / anti-Obama Ims, they like to point out his bad stuff too, but I just, for some reason, I just see it much worse now with the liberals and the Democrats. And if I'm insulting you, then I don't know. I don't really apologize because it's what I feel, but it is just amazing how bitter and just sharp-tongued that some people could be. Not everybody. It's bad to throw a brush across all liberals or all Democrats. That's just absolutely foolish. Just like it's bad to throw a brush against all conservatives / Republicans. And just for the record, I don't know why I'm going here on the video. It's supposed to be about stock market. I am not a conservative. I used to think I was, but there are a lot of issues that I don't agree with that I lean more liberal to. So, unfortunately, I have to use the word middle of the road, which I really don't like using. But anyway, enough about me. All right, so that's bonds. Here's gold. Gold's another one that people are trying to pick bottoms on. I don't see it. I think this will set up and move lower and test the 2016 lows. All right, and then how about oil? Yeah, so oil, like I've been saying, the seasonal high is usually around the July 4th holiday, but we've exceeded that. Now it looks like we're pulling back a little bit, but yeah, that's a pretty strong move. Pullbacks could be viable. The stock with double support coming up is Qualcomm. So Qualcomm looks like it is forming an A, B, C down. We have previous resistance, which now becomes support due to the change of polarity. And then you have the 50-day moving average. That's double support. If we do come in and test that, watch for a reversal candle as a potential long side opportunity. If you like what you heard, give me a thumbs up, leave a comment. Questions, tiny@attackthemarkets.com. And I will talk to you in the intra-week updates or in next week's video.